go ahead and jump straight into it. I'll see my screen here good.
Yep.
Awesome. Alrighty. So what we're going to be talking about today is dollar cost averaging and why, in my opinion, it's the ultimate approach to cryptocurrency investing, and why our newest feature, Get Paid in Crypto, encompasses dollar cost averaging as a passive way to start garnering exposure to crypto. So before we start diving into talking about crypto in any capacity, we're going to talk about the macro environment, what may seem quite boring, but is actually quite exhilarating and at the same time a bit scary. So when we take a look at the global economy where we are right now, post COVID in this case, we've been through basically about a year and a half worth of incredibly experimental monetary policy. We've got central banks and federal governments across the globe that have initiated massive amounts of monetary printing, lowering of interest rates, which lowers the cost of new money. And outside of that as well, stimulus programs, giving money out to individuals in the form of stimulus checks or other forms of government handouts or supplemental income. And all these things have finally started to reflect in the form of inflation. We've started to see what was, again, for many years, a supposed struggle of central banks. They wanted to actually increase the inflation rate, right? In this case, that were they able to meet towards their claim, at least according to their data. And now we're seeing a true reflection here in this case of inflation hitting the economy finally in 2021 and predictably going into 2022 from the original range of around somewhere in the 1% to 2% range all the way up here towards 5%. This is basically meaning that, according to the Federal Reserve, the cost of goods and services, generally speaking, is going up about 5%. There's another metric here that is utilized by the Federal Reserve Bank of Dallas. It's something called the PCE inflation rate, reading again in that upper single digit territory, starting to press towards 5%. Now, again, at the end of the day, there's going to be a lot of debate overall about which numbers are correct, if the numbers provided by the Federal Reserve or other federal officials or central banking thought leaders in this case is either too high or too low. Generally speaking, I think the wisdom sentiment is what you see every single day when you go to store, when you're looking at property values, if you're looking to buy a new home or rent in this case, or planning for college. The cost is generally at the numbers provided by these different types of institutions, if not much higher. I would be, safe to say in this case that I think we're generally seeing more towards around 7 to 10% inflation, especially during these unique times that we're in, and usually seeing more moderate 3 to 5%. The numbers are around 1 to 2%. So generally estimating the numbers are going to be worse off than what we're seeing. So that already puts us in an even more contextual situation where we have to find out, okay, we've got this problem in this case, which is the depreciation of money. And therefore, our net worth or our wealth in this case is going to be affected by that depreciation, albeit in this case, our purchasing power is declining, right? The ability of $1 in our bank account to go out and buy goods and services, right? If the cost of goods are going up, we need to be able to take our net worth and our wealth and hedge it in some kind of manner from rather than just letting it sit in a bank account, right? So we've got a serious problem here, right? We had what might be the proper macro response to get the economy back going, but it comes at a cost in this case to savers and those who have really worked long and hard to be able to build up their wealth. So we have to go about finding an asset in this case, or an asset class, broadly speaking, that would be able to position ourselves in a position where we'd be able to hedge against this inflation. What kind of assets have the kind of growth or percentage returns that will get us in a position where we don't have to worry about the Fed's inflation? I'll dive assets, and obviously one of them you guys can probably guess we were going to talk about is Bitcoin. Now, what we're going to be talking about today is not just Bitcoin as a whole, but talking about the broader crypto space and the methodology behind dollar cost averaging. So when we're talking about, generally investing in the markets, there's all kinds of markets you can get returns in. There are cryptocurrencies, which we'll talk about, but also there are equity markets, generally known as the stock market. There are commodities like gold and silver. There's all kinds of different investment vehicles that you can invest in. You can invest in real estate, bonds, whatever you may think of, right?